Good day, my name is Christelle from Klerk, Independent Technical Analyst. The first one on our list today is Anglo American. It's weekly graphs and the share is nicely oversold on the stochastic. There's no positive divergence yet, but that blue line, the K percentage line, is on the brink to cross through that orange line, which will confirm a positive divergence, which means the likelihood of a bounce to higher levels is there. I don't have a positive turnaround candle or a pattern yet, but what is positive on Anglo is the fact that for 3 weeks now, the share tested the 40-week moving average and did not create new support levels. I do apologize. I'll have to cough my way through this session. So I'm going to stop and cough and stop and cough. I do apologize for that. It's either that or there's no video. My 40-week moving average was tested several times and it kept it a support. Fairly right. Last week it closed below it, but at least it's not making new lows. So technically, the first sign of strength will be above last week's high, right? Which is waiting at 526 Rand 89. But technically, we would prefer to start to see higher lows, right? Bounces and then pullbacks, but the pullbacks not as low as previous pullback. That will be seen as very, very positive at the moment. But nothing wrong if you want to make use of this oversold situation to nibble on the share. You can maybe accumulate above last week's high and then stop loss that you can use. Keep in mind, look at your average true range to make sure the stop loss is not too tight. It's maybe a little bit, let's use this high of this candle, which is a strong support. It touches 3 candles, 466 Rand 66. Nice oversold situation, and hopefully a bounce. There's a lot of the commodities that are oversold at the moment that's on the brink of a positive divergence or already have a positive divergence. Our top 40 is also beautifully bounced to the upside, with that can easily take us to new record highs for a lot longer, right? And we know America is also very positive. Let's just quickly look at maybe just to support my statement here. The Americas, what is very positive, and I know a lot of the shares are extremely overbought, but ladies and gentlemen, the fact that they tested that 40-week, almost tested it, right? It didn't touch it completely, but kept it a support and bounced from it is very positive. And we've had this candle, the last candle is not completely finished yet, but we will have, 3 bullish belt hold line candles in 3 weeks in a row, which is very, very positive. In fact, the index, the S&P 500 turned around without being oversold in mid-zone, right? My stochastic was here around 54 when it's turned around for upside. That is very, very positive. Now, the strong next resistance is waiting at 5,669. That is that next roof that the index has to break through in order to sustain more upside. But very, very positive, which means the sentiment is positive for the long term, and we're obviously also following those footsteps at the moment. And with our commodities being so oversold, that can easily drive our market even higher. All right. South32 is the next one that was requested. South32 also extremely oversold at the moment with a positive divergence. Now, I've got last week's candle as well as the week before that. Last week's candle is a clear doji candle, small real body, small shadows on either side, almost the same in length. And then the week of the 5th of August, I had also a doji type of candle, even a spinning candle, some might call it, because of the longer upper and lower shadows with the small real body. Tells us indecision, right? It tells us they're not sure, the traders were not sure to take this share higher or lower. However, what is positive about South32 is the fact that the lower shadows for the last 3 weeks is higher every week. All right, the lows are every week for the last 3 weeks has been higher. That implies higher lows, and that is seen as positive. Now, there's a beautiful window there, a gap waiting between 39 Rand 95 and 41.51 is a gap. Now, a gap on a candle graph acts as a magnet. In other words, the buyers can be pulled into that gap. In other words, the share has to trade there, or it remains, in this case, a resistance, almost like a wind volt, just blowing resistance for that share. And we assume that the momentum to the top can remain to the downside as long as that window remains open. But if the buying power is strong enough, it can also pull the share up to close that gap. And sometimes on many graphs, you'll see they just close the gap and then there's a downside again. I'm not saying that's going to happen here, but it just highlights the importance of a resistance or support that a window can also have. My 40-week moving average at this case is still a resistance that is seen as negative, and it's also in the window. So that is a very strong resistance, a roof that has to be overcome. But possibly nice upsides here before the share becomes overbought or before the sellers come in and sell this off. So this might also be an opportunity here. Below the low of the 5th of August, below 33 Rand 60, we can assume downside again, and the downside might even escalate below that level. But nice window there that can act as a target, and beautiful higher lows on the lower shadows of the share. FirstRand, beautiful upsides. I mean, the momentum to the top on FirstRand is clearly in place. My stochastic is in overbought territory, right? But look at that. My K line is still pointing upwards, broken through that D line, the orange line, implying the momentum to the top is in place. The same year, 3 consecutive bullish build line candles, implying optimism, implying the momentum to the top is clearly in place. So for now, the big question is, where are you going to take profit? All right? So I would consider, first thing, you can use any trend line that's got 2 touching points or more is seen as a permanent trend line. And the touching points, either a real body or the shadow, when it touches that trend line, it can be seen as a level. But the last strong resistance here, or support in this case, was a resistance back in the week of the 28th of March 2022, and that weighted at 79 Rand 34. So that is now a strong support. That was previously a very strong resistance because the share just kept below that for a very long time. So technically, the first sign of weakness will be below that level, 79.34, right? And that's the high in the week of the 28th of March. Momentum clearly in place and for as long as that level remains a support. My 40-week moving average is also a support that is very, very positive at the moment. My stochastic is overbought, as I said, but I mean, the candles are showing people continue to buy despite being overbought. Tiger Brands. A share that had us worried for a while because it had a massive head and shoulder formation on it. Left shoulder, head, right shoulder. But ladies and gentlemen, once that right shoulder started to become a support, the warning was off the table, and I mean, the share just skyrocketed to higher levels. For back in the week of the 10th of June, 2024, 18th of June, and that week of the 24th of June, the share tested the 40-week moving average 3 times and kept it as support. That was seen as very, very positive. My stochastic at that stage was sitting on a 333, also not completely oversold it, but turned around for a positive divergence, very, very positive. So at the moment, on Tiger Brands, the big test will be that resistance in the week of the 20th of Feb, which is waiting at 229 Rand 58. But that was also a strong resistance of last week, right? So, and it's now trading just below it. So the big test is there enough buying power to break through that resistance to take the share price to higher levels? Or are we going to see some profit taking again? Maybe, to whatever support level the sellers start to say, listen, we've taken enough off the table. We want to give the buyers an opportunity. My 40-week moving average is a critical support level, 204 Rand 38, and that level means and tells us that the long-term sentiment towards the share is positive. So at the moment, 220, I'm going to give you that exact level, 229 Rand 58 is the critical level that has to change into a support in order to sustain the momentum to the top. If I go back on Tiger Brands, ladies and gentlemen, we can even see, okay, it did not touch it, but it came very, very close to that exact same horizontal level back in May 2021. It could not change it into a support and retrace from it. And if I go back and zoom out a little bit, we can see that this was previously also at a very close to that 40-week moving average, exactly the same horizontal level, tested it, could not, just had a false break, confirmed negativity with a beautiful evening star formation. Look at that. Bullish candle. Let me just zoom that out a little bit to make it more visible. Bullish engulfing candle, followed by a doji, followed by a bearish candle. Evening star formation, telling me, listen, the night is coming. Strap on your boots, it's going to be tough. And I mean, very close to that same horizontal resistance level. And it was resistance and downside ever since then, until all the way back to the previous one that we had a look. So ladies and gentlemen, the point I'm trying to make here is this is a very critical resistance level that has to be overcome in order to take Tiger Brands to the next level. As I said, my 40-week is critical to sustain that momentum and that support. And for me, that will be the next sign that that weakness is confirmed once that 40-week moving average changes into a resistance. If I add my 20-week moving average here, represented by the green line, I can see that that golden cross formation, where that green line broke upwards through my orange line, is still in place. What does that mean? The bullish trend is still on the table. As long as that 40-week or 20-week moving average, the shorter one of the two, is pointing upwards through it, it is positive. But take note how close it is at the moment to the 40-week, which means should the share start to retrace, that it won't take long for that 20-week to start to break downwards through the 40-week, which will then confirm a death cross formation again, which will confirm a bearish trend. So for those who have hold on to Tiger Brands for a very long time, one maybe want to keep this graph a lot closer for the weeks to come. All right, let's just quickly have a look at the Rand against the American dollar. And let's just line graphs to take out the noise. The easiest way to determine if I am expecting a stronger rand or a weaker rand against the American dollar is my 40-week moving average, that red line in the sand, right? These are weekly graphs, so our view for a rand, 3-month plus view for the rand, is a stronger rand. Why? Because we are trading below the 40-week moving average. Yes, my currency pair is oversold at the moment. Look at that. My stochastic is sitting on a 15 bat pointing downwards, so they can easily start to support the rand. The rand can easily weaken a little bit, maybe even back to that resistance on the line graph of 1831, or even back to the 40-week of 1856. But our 3 months plus view for the rand remains a stronger rand as long as that 40-week moving average remains a resistance. So if you need to make a decision on whether you expect a stronger or weaker rand, take a weekly graph, add the 40-week moving average and say, is my rand trading above it or below it? If it's below the 40-week moving average, we expect a stronger rand. If it's above the 40-week moving average, a weaker rand against the American dollar. If you've got questions or any requests that you want us to analyze, feel free to send us an email to admin@fransdeklerk.com or message via Twitter. Have a fantastic week. Take care.